Welcome 2nd PU Commerce students to Exam Tips and Tricks channel. Today we will understand 12 marks question, preparation of revaluation account, partners capital account as well as reconstituted balance sheet. So this is one of the examination question. So that has been appeared during the previous years. A and B are the partners. The profit sharing ratio is given as 2:1. The balance sheet as on 31/3/2024 that is given. So under liability side, creditors, bills payable, reserve fund, capital is given. Under asset side, various assets, current assets as well as fixed assets of the firm that is given in the question. So various assets are cash in hand, stock, debtors, machinery, building, investment that is given under asset side. So you are asked to prepare revaluation account, partners capital account as well as reconstituted balance sheet on admission of a new partner. So first we will understand various entries where it has to be made. So creditors that appears in the balance sheet under liability side. So that appears under liability side of the balance sheet. Bills payable, liability side. Reserve fund that appears in this partners capital account under credit side that has to be distributed among all partners in their old ratio 2:1. Two partners capitals also given. So that has to be recorded as balance brought down under partners capital account. So various assets of the firm that appears under the asset side of balance sheet. So let's understand how these entries that has to be made. So creditors that appears under the liability side as 20,000. Bills payable also liability, so record that as 10,000. So reserve fund that has to be distributed among all partners in their old ratio. So reserve fund so that is 12,000. It has to be distributed in their old ratio. Only all partners are entitled for the share of reserve fund. So 12,000 into 2/3, 12,000 into 1/3, that will be 8,000 as well as 4,000. So only old partners A and B are the old partners. Only old partners are entitled for the share of reserve fund, which has to be distributed in their old ratio. Two partners capitals given, it has to be recorded as balance brought down. So A's capital given as 60,000, B's capital is given as 40,000. Cash in hand that is an asset that appears under the asset side. So 5,000 with plus certain adjustment. Next, stock that is an asset, stock 15,000 with certain adjustment. Next, debtors, it's one of the current assets 20,000. Machinery, that is a fixed asset. The value of machinery is 30,000. Next, building, that is one of the fixed asset buildings that appears under the asset side. Investment is also one of the asset of the firm, that is 12,000. Rest of the fixed asset that has to be recorded with certain adjustments. So which are the entries that has to be made? That is clear. Creditors, liability side, bills payable, liability, reserve fund, that has to be distributed among old partners only in the ratio of 2:1. Capitals given, record that as balance brought down, and partners capital account, only old partners capitals that has to be considered. Cash in hand, that is an asset with certain adjustments. Stock, asset. Debtors, asset. Machinery, fixed asset. Buildings, asset. Investments, asset. So these are the entries that appears in this balance sheet. Next, additional information is given. On 1/4/2024, C is a partner who has been admitted into the partnership business. So we are preparing a reconstituted balance sheet on the date of his admission, new partner's admission. C should bring in cash 25,000 as capital and 15,000 towards goodwill. So C is the new partner who brings, as he's joined into the partnership business, he brings 25,000 as capital amount and 15,000 towards goodwill amount. So record that as cash account in this partner's capital account. Under his column, 25,000 plus 15,000, that will be 40,000 under new partners column. One more entry that has to be added to the cash balance because that is an asset. It has to be included to the cash balance. So this goodwill amount, the amount of goodwill, and that has to be distributed among the old partners. Old partners are entitled to get the amount of goodwill. Usually goodwill amount has to be distributed among old partners in their sacrifice ratio, but in this question sacrifice ratio is not given. In case if sacrifice ratio is not given, then goodwill amount that has to be distributed among the old partners in their old ratio, that is 2:1. The entry for the distribution of goodwill amount among the old partners, that will be new partners capital account debtor to old partners capital account. So new partners capital account debtor to old partners. So A's capital account as well as B's capital account. It has to be recorded under C's column. The amount of goodwill, that is 15,000. Goodwill is brought in by a new partner when he is being joined into the partnership business, and this goodwill amount, that is 15,000. So it has to be distributed among old partners in their old ratio. So that will be 10,000 and 5,000. So the entry will be new partners capital account debtor to old partners capital account. So old partners capital account has to be credited with new partners. C is the new partner. So new partners capital account. This is the entry. C is capital account. So this is the entry. New partners capital account. Debtor to old partners capital account. Old partners capital account is credited with new partners capital account. C capital account. So this is the entry that has to be made. So you can write this as C's capital account because C is the new partner. C's capital account that has to be recorded. Next, so this is how goodwill amount that has to be treated. If goodwill amount is withdrawn by the old partners, then on the debit side of partners capital account, it has to be recorded as cash account. Half of the goodwill amount, if it is withdrawn, then half of the goodwill amount has to be taken into consideration. And debit side, cash account under old partners column, these goodwill amount will be old partners. So that appears under old partners column, and this is how goodwill amount that has to be treated according to accounting standard 26. Next, we need to make the revaluation of assets and liabilities. The value of assets and liabilities has been increased or decreased, that has to be revealed through this revaluation account, and profit or loss on revaluation that has to be transferred to partners capital account. So appreciation of building, the value of building that has been increased, so increase in the value of building that has to be credited. So buildings account. So what is the value of building? 60,000, and there is appreciation of 20%. So that will be 12,000, and one more entry, as there is increase in the value of building, so it has to be added to building account. The value of building is 60,000 and there is appreciation of 12,000, so total 72,000, that has to be recorded under amount column. Stock revalued. So the value of stock is 15,000. When it is valued, now the present value is 12,000. So the value of stock is declined, decrease in the value of asset, that has to be debited. And here in this revaluation account, increase or decrease, that difference has to be disclosed. So earlier 15,000 was the value, now it has been declined to 12,000. So what is the difference that is disclosed in this revaluation account? And in this balance sheet, so there is decrease of 3,000 amount. 3,000 amount has been declined. Now the present value of stock will be 12,000. That is the next entry that has to be made. So provision for doubtful debts. So earlier there was no provision in the balance sheet. Now the provision PBD has been created, and that is created on debtors. So the value of debtors 20,000, on which 5% provision that has been created. So the amount will be 20,000 into 5%. So 1,000 is the depreciation amount. One more entry, it has to be deducted from PBD, has to be deducted from the debtors amount, that is 1,000. So deduct that, 19,000, that appears under the asset side. Outstanding salary. So there is increase in outstanding expense. So increase in expense, that has to be debited to revaluation account, as it is one of the outstanding expense. Then one more entry that appears under the liability side of balance sheet with amount 2,000. So this is the entry. So additional information where we need to make two entries. So it has to be disclosed in two accounts. So C is the new partner. When he is being admitted into the partnership business, he brings 25,000 as capital and 15,000 towards goodwill. So we need to treat goodwill as per accounting standard 26. So the entry will be, so in this partner's capital account, it is disclosed as cash account, both goodwill amount as well as capital amount that has to be added, and it appears under new partners column. That is the one entry, and this has to be included to the cash balance as it is one of the asset. Goodwill is one of the intangible asset, so both has to be considered under the asset side. And what is the total amount that appears under the amount column. Next, this goodwill amount that has to be compensated, distributed among the old partners. What is the goodwill amount brought in by the new partner? That has to be distributed among the old partners in their sacrifice ratio, as no sacrifice ratio given in the question. Old ratio has to be taken into consideration. The journal entry will be new partners capital account. So C's capital account data to old partners capital account. It has to be distributed in the old ratio 2:1. One more entry. Old partners capital account has to be credited with new partners capital account. This is treatment of goodwill. Only goodwill amount that has to be taken into consideration. Next, depreciation of building. Building value has been increased and 12,000. So the value of building is 60,000 into 20%, 12,000, and one more entry it has to be added here. Then stock is revalued. The value of stock, it was 15,000, now it has been declined to 12,000. Difference is 3,000. As decrease in the value of stock, it has to be debited. One more entry. What is the present value of stock? 15,000 minus 3,000, 12,000. That appears under the asset side of the balance sheet. Provision for doubtful debts. This provision has to be created on the debtors 20,000 at the rate of 5%. So PBD that appears under the debit side, and one more entry, it has to be deducted from the debtors, that is 19,000. Next, outstanding salary. Outstanding salary, as it is one of the outstanding expense, so that appears under the debit side of revaluation account. One more entry that appears under the liability side of balance sheet. So these are the entries for these additional information that has to be made in two accounts. So now we will close revaluation account. So revaluation account can be closed by the way of making the total. It has to be total. So 12,000, write the total, same total 12,000. So from 12,000, as you deduct 3,000, 1,000 and 2,000, you get a balance of 6,000. So that is a profit that must be transferred to partners capital account. Old partners capital account, because only old partners capital account, only old partners A and B are entitled for the share of this profit, and 6,000 into 2 by 3, 6,000 into 1 by 3, that will be 4,000 and 2,000. So that appears in this revaluation account, and it has to be transferred to partners capital account. It must be transferred to partners capital account. To the credit side of partners capital account. So here it has to be transferred to credit side of partners capital account. So 4,000 and 2,000. Only old partners are entitled for the share of this profit on revaluation. Next, partners capital account can be closed by the way of making the total. Find out the total. So total will be 40,000. Make the total of C partner 40,000. So from 40,000, as 15,000 is deducted, so 25,000 is the closing balance. It has to be recorded as balance carried down. Then this closing balance has to be transferred to reconstituted balance sheet. Next, make the total of B, that is 51,000 total. 51,000, write the same total under debit side also. So there is nothing to deduct. So write the same value as 51,000. Next, A partners, total is 82,000. It has to be recorded. Total is 82,000. Write the same total as 82,000 and closing balance will be 82,000. So we have closed partners capital account. This capital has to be transferred to balance sheet, reconstituted balance sheet A, B, C. So that will be 82,000, 51,000 and 25,000. Now balance sheet that has to be tallied: creditors, bills payable, outstanding salary, then three partners capital. Here cash, goodwill amount as well as capital amount brought by the new partner, then stock value that has been declined and now present value is 12,000. Debtors, BBD has to be deducted 19,000. Machinery, there is no changes with the machinery, record that as 30,000. Building, the value of building that has been increased, now present value is 72,000. Investment, that is 12,000 without any changes. Now balance sheet that has to be tallied, and the value of liabilities that is equal to value of asset. So that is 1,90,000. So this balance sheet has to be tallied, and this is how we need to prepare evaluation account, partners capital account as well as balance sheet, and this is a question that carries 12 marks.